Good morning, everyone. Well, this isn't very impressive after Friday's rally, but we've seen plenty of one day bull markets fall apart. I'm not so sure this one will, but I'm hoping to see prices move lower for a reasonable buy setup. So we had to move up another wide range bar. This one not nearly as impressive as back here a couple of weeks ago, which fell apart, as you can see, and pretty much all the green bars have fallen apart since the high point over here where things made the turn. I thought what might happen today after a reversal like this would be things would just come out of the blocks. Charts. Yes. Thank you, Dan. There you go. So it's pointing to these green bars that didn't have any follow through. I'm not so sure this one won't yet. It would be, I guess it shouldn't be surprising, but it is surprising to see. Was surprising to see this happen. Such a green large bar fall apart the next day. Usually, when it's going to happen, it happens a few days later. So, do we get what we call a 1, 2, 3, which would be a consolidation day? And prices are at this resistance we have here. Let's scroll this apart. And 7 o'clock, 8 o'clock. So the move up just hit that resistance area. A more impressive move obviously would have been to take it out, and we're just consolidating underneath it. So factory work, pivot, it retested the pivot. It held another one. It held, and an attempt to move up. Pretty feeble retracement and a topping tail. Head and shoulders top, maybe. Could be. Set an alert down here. And whatever. That's funny. All right. I meant to grab this. And bottom of the trading range here, intraday for the moment. Let's see where that is in relation to the wide range bar. It's still in the upper half, give or take, right? Upper third. So any dip down there would be within the context of acceptable. The next level, 39.53. That would be getting a little deep, but it would have to rally back up down from this point and form a bottoming tail bar, which would be fine for a counter trend trade. My trend is down. Almost everything we look at is a little extended to the downside within the downtrend. And so getting a bounce from here would make sense, right? Ideally with a consolidation day. 39.50, big open interest. And what I have written down, I didn't look at that today, is juice down here at 39.05. So 39 below 39.50 would require a break of Friday's low. And there's nothing below it. So while that open interest is something and the 39.50 is something, there's really little to nothing to the left, because at that point, I think it would go down and fill the gap. If it got that far, why not? Where would anybody want to buy? Right? That's the psychology of the trading. What do other traders want to do that have learned technical analysis 101? Right? Gap fill is a reference point of support. Now, what we see here is that there's nothing below that, which could open up the door to going all the way back down there, but it's unlikely, I think, that would happen today. So looking at SPX, you got the pivot low here, 39. Let's call it 39.80, give or take, whatever. And then yesterday's low, 39.50. That's some big juice down there, McGraw. So I've got 39.05 written down, which is 95 by $1. And as things are moving down, 3,900 is 80 by 90. So it's far enough away for a reasonable put spread trade that the thought it won't go all the way down there today. Now, the trend is down. So look, it's not inconceivable that it could go down there, but I think it's reasonable to think that it wouldn't go down there today. And after the move off of the low, buyers are going to want to step up. So I've got 41.20 here. I put that, and I had written down, which maybe the premium isn't there anymore. I'd written down 41.30, which had more juice there before things started to pull back a little bit. And so now 41.20-ish up there. Yeah, we'll see things jiggle around here, but I think that's a good number. I mean, if it gets through here, I think buyers are going to feel empowered, and that is within striking distance. Right now it's jiggling around somewhere around here. I think I have to go back and look at where things are actually trading and compare. But just looking where things are within Friday's range with the crosshairs, the downside, I think, is potentially a better bet only because of this reversal, and institutions, they just want to buy. Now, they keep getting shellacked for doing it, but it's the beginning of a turn. It got close to this targeted area down here. I'm hopeful that eventually it does get down here. One of the things we talked about over the last couple of weeks was the fact that these topping tail bars on the weekly chart are not supportive of a high probability turn, meaning getting much higher, because there were attempts to go up, which you can see on the daily chart. You can see the attempts to go up that failed, just looking at the same information from a different time frame. And the attempts that went up, you can see the crosshair over there that failed. And all of those attempts leave overhead resistance. So as we look at multiple time frames, last week's MT Live, we didn't get into something like this. It's more advanced, but I'm just pointing to you what pictures are actually displaying the same thing, but in a different pattern. Right. So we've got this overlapping bars here. Getting through that could open up the door to going here. I think more or less, if you're open to it, you can see what's happening here at the open. Maybe an iron condor even makes sense, because I think it's unlikely so far that it's going to go to either one of these areas, up or down. So pick your whatever. All right. NASDAQ. Same story, just hovering there under the resistance. So with that rally, no one was confident enough to keep pushing it through the supply area. And same story, pulling back, making pivots, trading range, blah, blah. Russell, a little bit more, got through here, right? But same pullback, same downtrend, same extension, same pattern. Dow, similarly, same patterns going on here, which you would think that's normal. To some extent it is, but we saw plenty of times over the last year or two prior to this one. A lot of times, the Qs, tech was leading the way up, and that might be moving and others weren't. They weren't always the same pattern. So mentioning that. Bitcoin was up earlier. Now it's same pattern, extended, trying to hold on to the turn here. Ideally, it doesn't, right? Just not Bitcoin. I'm not picking on Bitcoin per se. I think generally all of these struggle today. They cannot get higher. They go down, they break the lows, and that, then we look at these patterns from the point of view of hey, it made a new low. Yeah, I know it's in a downtrend. It's gotten extended. It's gotten more extended. It starts to make a turn wherever, you know, slowing momentum, right? That's strong momentum. So this is less desirable because it's moved down from a consolidation. Strong momentum. Before you want to trade a counter trend trade, you want to see a new low, or at least a test of the low where the momentum slows down. Counter trend trades are always going to be lower odds than trend trades. Common sense. So somewhat similar consolidation, not as long, but the same kind of story there. And ideally, we get a move somewhere down here, which would make a whole lot more sense than kind of stopping at this part of the range. Buyers are anxious to get long crude oil, trading range, gold going down, silver broke down below the lows there. Going to spring right back up? I don't know, but if it doesn't, it's got a long way to fall. And we mentioned, here's the culprit. So keeping an eye on the dollar, just set alerts. You don't have to keep an eye on it per se. Set alerts down below a little bit. And if it does start to fail, breaking this base, in this case, a prior week's low, silver and gold should begin to stabilize. And interest rates, pulling in a little bit. All right. Put spread. I'll post for YouTube, McGraw, your suggestion. They want to follow. We have some spread traders that come every day. SPX spread traders. Euro heading down. It's actually, and again, comparing the dollar, you see the dollar's moving up and up and up. What's it trading against? Here I'm picking the euro, most popular thing, and it's down here near this low. We'll see if it breaks down below. But you look for intermarket analysis relationships that might guide us, even though we're not trading this, right? We're looking for relationships with something else that we would want to trade. So silver, gold, the inflation theme, but they're not going up. Look at the euro, see if that's at support. Does it turn around? Dollar come in. Long setup for silver and gold. Not there yet. All right. And as we always do, transports. There's lots of extended charts to the downside, supportive of bounce, but now the transports broke down, the ETF. But look at this. Maybe not everyone aware. This is the one that's quoted. It hasn't broken down. This is 20 stocks. The other one, I think, is about 50 stocks. Which one is real? Well, this is the one that institutions are looking at. I don't even know why they have an ETF with all of those rather than just a mimic of this, but that's what it is. To you, Dan.
Good morning. Yeah, I agree. That's the bias I'm hoping for. We're just trading bounces here, but I actually have more bullish setups than bearish ones, just for continued bounces on. But I'd love for them not to trigger, and then get the pullback scenario. All right, our opens are fine. There's not too many gappers, but let's just go right to that list of mine and other watch list items. So DWAC here, I was considering this for put spread. It's not a great pattern, but possible higher low retest. I see it up here, but the problem was the spreads were too much. MANT, that's a big gap to $94. Wow. I wonder if that's a buyout. I do not like the way that trades though. Look at these bars. I mean, this daily chart's almost impossible to trade on. It is a buyout, I think. It just looks like it. All right, Carvana, we actually sold a put spread on this on Friday on earnings. It's a Climo. We said it's not a typical Climo because it didn't get the acceleration lower far from the 20. It's more just total bearish dumping. But I love the volume. We did a recent MT live on volume and all that dumpage there after a move like this. And it started out Friday with a wide range bar here on the 15. Now it's gapping up. And even though it's against us, way against us, we have a nice open profit already. We sold these $17 puts. Think about that, 50% lower. And we got huge premium. It was crazy. In fact, I'm working on the trade review of the week of some of those panic put spreads we sold last week. They all worked out beautifully. NEO here, another example, bouncing a downtrend, nice little bullish gap here that could 30-minute high be a day trade long. Let me put that right there. This Mr. and Coin were the ones that we were selling crazy premiums on. And I would love for it just to have a slow, controlled retracement into this gap fill from Friday's gap and then reverse. And then we'll be all over those things for selling more put spreads or naked puts. Look at this poor thing, CMRX. Look, it's already in a death trend on the daily, weekly. Now it's getting chopped more than half. That thing looks like it might be going to the graveyard. Oscar Bravo, gapping up to yesterday's high on the 15. That could be a 10, 15-minute high. That's not bad. For a day trade, I'll put that in the bottom right, Oscar Bravo. Wix had earnings gap down, but now it's coming back, so I don't know what to do with that. CFG earnings, no great pattern. Day trade at best, 30-minute high. Piton had a favorable comments and Barron's, bouncing an uptrend. McDonald's, the news said they sold all their stores in Russia. They're getting the heck out of that country. RCII, yeah. I actually had shorted puts on that last week on the earnings breakout, but we'll look at it again. Sanmina. All right, now this is a deep retracement, but I like all the convergent moving averages. I like the bottoming tail. I like the big old reversal that had earnings. I don't see where it's gapping, but that's a candidate for long and put spread. Greg saying hurl, yeah. You should have given me that over the weekend. Hurl looks great. I'll put that in a window. All right, where am I? Oh, I also gave Save as a put spread. It's a gap from a Climo. They got a $30 offer from like JetBlue's doing a hostile tender $30 offer. With the fact that this is not gapping up more with a $30 offer, that is just 100% telling me the market doesn't believe it. It's not buying it. Why is this not gapping up to $27? It's because they think that the deal's not going to go through. Reinert Air gapping down on earnings, although I don't see any prints. And then I saw a little byline on CNBC where Ryanair Airline is trashing Boeing, saying they're running around with their heads chopped off. Yeah, Boeing has been getting trashed for a while, and the chart suggests that. Wow, do you all remember in the green room, I gave a target of 120? Greg, another example, we got to get these pig targets that you probably shake your head sometimes when I give these pig targets, but I remember this at 170. I'm like, this can fall $50 daily, weekly. So wheat, yeah, we had wheat in the advisory letter. I just sent out in a text alarm saying, let's wait for a pullback. I'm not going to chase it. Let's see if we can get a pullback to 1180-ish area. Dunking, it's a bounce and a downtrend. There's so many that are like this. So for day trades, you just got to find the best looking 15-minute charts. And yes, this is a candidate for that. All right, JetBlue, the one making the tender offer, down 20 cents, no pattern, no interest. I don't know why they are wanting that chunky airline so bad. Aluminum, and then there's a bunch of Climos too. So aluminum's a Climo, DXCM a Climo. We actually had a ton of trade ideas in the weekend letters, ton of them. Much, more than I anticipated based on the market. All right, AMCR making the turn in an uptrend over Friday's high. Jack Henry, I did post. This is, down a lot on the 200 support. Now this one, yeah, we typically go over prior bar's high, but no way would I do this one over Friday's high because it's not a potent reversal. And you've got all these overlapping bars right here, which on an hourly chart is going to be resistance. Some of these travel stocks I see ready for a bounce. RCL, CCL, we got a beautiful short on this last week, and we got this entire meat of the short. Expedia, I know, in the travel sector. Now here's another one. You have to wait for it to get over Thursday's high. For the same reason I just said of Jack Henry, there's no potent turn yet. SMH, I was watching this for a possible put spread because there's juice even at the 220s. UHS, possible put spread. I like, it's a sloppy W, but that's what it is. Momentum move down, up, retest. So this one's a little trickier on when to get on board. So that's why it's just a watch. Hilton hotels look like ready to bounce. Here a turn on support. If the market's going to stabilize, that's a put spread idea. CFG, I think at earnings, it's in a downtrend, 30-minute high at best. Shell had positive mention of Barron's, no pattern. PayPal, bounce on a downtrend, Friday's high, put spread. Visa, I like the turn. I like Friday's bar taking out the lows and then a closing breakout, not Friday, Thursday bottoming tail and support, far from the 20, closing breakout on Friday. So I like that for a put spread a lot. Pfizer, red bar ignored over Friday's high. AMPH alarm. Merck alarm. AMPH 5-minute high is a go. Merck 5-minute high is a go. So we don't trade in the first 5 minutes, but say as long as these are not excessive moves. And let's see, Hilton. See, now Hilton is good to go as posted because it gapped down. Let me set an alarm 84.43. Not Hilton, Hyatt. But I have Hilton on my list here too. All right, so that one will just be a clean hit if it hits.